All right, folks, buckle up. The million-dollar question: are we buying the dip on Tesla, or are we running for the hills? Is it about to soar 20% or crash 30%? The answer is right here. I'm Kevin, and in this video, we're dissecting Tesla layer by layer, from the weekly chart all the way down to the hourly. I'm giving you the clear, no BS trade plan. First up, the weekly chart. This is the big picture, what decides the fate for the next few months. And it all boils down to one word: hold. Hold what? Hold 385. This is the ultimate life support line. Why is this number so critical? Because 2 months ago, Tesla broke out above $365 with heavy volume. That was the signal the big money was moving in, kicking off this bull run with a long-term target all the way up at 527. Right now, the price is pulling back to test 385. If it holds here, it means the institutions haven't bailed, the trend is still intact, and we can comfortably hold, aiming for 500 plus. But, and this is a big but, if the weekly chart closes below 385, don't overthink it. The trend is likely broken. It's open season to the downside. The first major support is back at 365. And if it slices through that, we're looking at a nosedive to $306. That's a over 20% drop. This is not a drill. All right, big picture is set. Let's zoom into the daily chart. This shows us what's happening right now. The verdict? The bears are in control. Why? Because it just broke down below a major short-term support level at 415s. This breakdown is like the bears busting down the front gate. Look at the price action. The bounces are weak, volume is anemic on the up moves. There's just no buying enthusiasm. So the downward momentum on the daily is strong, and its target is to test our weekly life support at $385. So when do we know the bears are losing their grip? Watch $429. Until the daily chart can close back above 429, treat every single bounce as a dead cat bounce, a trap. Don't fall for it and jump in too early. Now let's get more granular with the 4-hour chart. This is where we find the turning signals for the next few days. The 4-hour chart is in a clean downtrend. $415 has flipped from support into a solid wall of resistance. Any bounce that gets up near this level, if it shows signs of stalling, like a long upper wick on the candle, that's your shorting opportunity. The target to the downside? First, it will test this minor support zone between 395 and 398. If that gives way, it's pretty much a straight shot down to 385. So the 4-hour chart's job is simple. Watch the resistance at $415 and the support at 395. In between, the bears own this market. Finally, for the scalp traders, the 1-hour chart. This is for pinpointing your entries and exits. It moves fast, so 3 key things. 1. If price crashes hard into the 385 area, do not chase it down. Be patient. Wait to see if a classic bullish reversal pattern forms, like a bullish engulfing candle or a morning star. If you see it, you can take a small long position with a tight stop below $382, targeting a bounce back to $400. 2. If price just blows straight through 385, your next level to watch is 374. 3. On any bounce, the first hurdle is 405s and the major one is 415. On the hourly, until it breaks 415, do not even think about calling a trend reversal. All right, we've gone through all 4 time frames. The path is crystal clear. Now, let's get to your game plan. I've got 2 strategies. For the swing traders, your mantra is wait. Let the market come to you. If price arrives at 385s and shows a clear bullish reversal signal on the 30-minute or 1HR chart, you go long. Place your stop loss below $380. Your first profit target is $430, and your second is $468. Conversely, if price confirms a close below 385, especially on high volume, you consider going short. Stop loss above 395. First target 365, second target 306. For the short-term traders, you play the swings. In this bearish trend, focus on rallies into the $405, $415 zone. If you see weakness there, a doji, a bearish engulfing pattern, that's your short signal. Stop loss above 490, target 390. Be disciplined, in and out. A few final words of wisdom. Rule number 1. Use a stop loss. Don't gamble with hope. Rule 2. Manage your position size. Don't go all in when the direction is unclear. Rule 3. Patience. The best trades come to those who wait, not those who chase. I'm Kevin. I give you the hard logic and the clear levels. If this deep dive helped you, you know what to do. Smash that like button, hit subscribe, and I'll see you in the next one.